14 reasons not to invest in Bitcoin. Wait, what? Hey everyone, welcome to another episode of Crypto Corner with myself, OJ, crypto analyst and investor since 2016. Now, today I saw this article. It's not a new article, by the way. It's from about a year ago. It's called 14 Reasons Not to Invest in BTC, Bitcoin. It's by Justin Bonds, who is an editor of Cyber Capital, which is a fund manager specialized in providing exposure to the crypto asset markets as an alternative asset class. I'm not really familiar with the guy and I don't really know his history, so we're going to find out what are his reasons not to invest in Bitcoin, and I'm going to analyze and discuss. So let's get started. Well, first, he starts looking at BTC objectively from a fundamentals first investment perspective. It's abundantly clear that it should not be taken seriously as an investment at all. I mean, why? From the fundamentals first perspective, I would say there are quite a few reasons to take it seriously as an investment. Limited supply. I mean, how many of the assets that are available to invest in including stocks, including precious metals, including bonds and everything, how many of those are indeed scarce or have a fixed, not just limited, because gold is limited, but we don't know what's the limit, silver as well. You know, these are precious metals that we keep mining and we know that we're going to run out at some point. We don't know when. We don't know how much there actually is. Bitcoin is completely fixed. We know exactly 21 million. There's no guessing here. Stocks, I mean, companies have many times been known to just print extra stocks, just flood the market with extra stocks as they grow, as they scale. So what else is actually as fixed and scarce as Bitcoin is my question. Let's continue. Bitcoin is an emperor with no clothes, without a foundation in utility or long-term security, consequently making it a purely speculative asset contrary to the original goals of the project. Now, at first glance, you can argue that there is a point here, because it is true that Bitcoin, as of today, still doesn't really have too much of a utility. I would argue there is utility, but it is limited. Mainly, it acts as a store of value these days. It was not the original intention. It was supposed to be digital cash, but it just became too valuable to many people to be used as digital cash. Also, digital cash cannot be extra volatile. It needs to have certain stability so that you can really be paying for products, because if I'm a retailer and I buy certain stock and I need to sell it, I need to know exactly what I'm going to be charging for that stock, and I need to know that I'm in profit. I cannot be charging in a currency that goes up and down all the time. Therefore, tomorrow, the money that I just took from that product could actually be much less in value. So that is not a very good quality to have for any kind of type of money. So Bitcoin as money is not perfect, but as a store of value so far, it's been very good. And the main reason is that scarcity again and security. You know that it is the most secure cryptocurrency that ever existed. And it's also limited in supply, and it's a small supply, which is very important because many cryptocurrencies have a fixed supply, but not many have 21 million only. 21 million is not a lot. This is what makes it more valuable. One of the reasons. There's other reasons, but these are the key reasons that make it valuable. And as it is valuable, people don't really want to spend it. I actually had an episode a few years ago back with Ivan on Tech. We had a discussion on Bitcoin. At the time, it was when Bitcoin Cash and BSV were really competing and trying to, they were coming for Bitcoin from all sides. They were really trying to establish themselves as the real Bitcoin. And we were discussing, these things. And he made a very good point. He said, people don't really want to spend good money. Good money is always going to be preferred to be stored. And the trash money is the type of money that people like to spend easily. Therefore, you can easily spend Litecoin or BSV or BCH, Ethereum even, and many other coins are much easier for you to part with than Bitcoin. And this is for the majority of people. I'm not saying that everyone is like that. Of course, maybe one of you who are watching this video don't really feel like that. But for me, Bitcoin is the one that I've been holding for the most time since 2016 when I bought my first Bitcoin. I still have some of those that are sitting in a ledger, and some of them are sitting in a trezor since then that have not been moved. I'm not doing the same with my altcoins. Altcoins I spent much easier, but let's start now point by point. So the first point, no capacity or utility, as he says. The block size limit fundamentally limits Bitcoin throughput to between 7 to 22 transactions per second, which means it would take more than 70 years for everyone in the world just to do a single transaction. Well, this is an argument that we've been discussing many times already. We have layer 2 solutions. We don't need everything to be executed on the main blockchain. Lightning Network is a very good example. Now there's already wallets. At least a few years ago, Lightning Network was not yet advanced, so people were really not taking it seriously. Now we have many services and wallets that are using Lightning Network, and you can think anything you want about Lightning Network. It is a separate layer. You can talk about centralization and all of those other things, but it is a solution, and it is quite an effective one. So I don't really see the problem with that. He continues. This means that widespread and significant usage of Bitcoin is impossible from a technical perspective, as usage has literally been capped. Some have proposed, oh, he is actually talking about this, all right. Some have proposed the Lightning Network as a solution to this problem. However, onboarding people onto the Lightning Network in a non-custodial manner actually requires several on-chain transactions, while high fees are also passed on to Lightning Network users during times of congestion. I must say I don't agree with most of this here, because high fees are also passed on to Lightning Network users. I want to see proof of that because I have not experienced anything like that. I don't know anyone who's charging high fees on the Lightning Network, so the block size limit, he continues, therefore destroys all potential use cases for Bitcoin. I can already tell that this is a person who is a big blocker. If you remember, back in 2017, we had the big controversy and the big fight between big blockers and small blockers, i.e. people who wanted to increase the block size of Bitcoin, of the blocks on the Bitcoin network, so that you can fit more transactions, so that you can have, faster speed of transactions and everything. More transactions being fit onto one block, less congestion. Every time the network gets congested, people start, raising the fee that they're paying for a transaction, so that their transaction can actually have advantage or priority. And at some point, it got to $70, $80, $90 per transaction for Bitcoin. This is back in 2017. So yes, we needed some solution that came with SegWit. Small blockers, people who wanted to keep the size. I mean, we still increased the size to almost double. So from 1 megabyte, I think it's now around 2 megabytes. So we still increased the size, but SegWit really allowed for more transactions to be fit onto a block without necessarily increasing the block size indefinitely, which is what big blockers wanted. So if this is a big blocker, I'm not surprised that he is bashing Bitcoin, because Bitcoin took the small blocker side and decided to just go with, and when I'm saying Bitcoin decided, the community. The community voted for SegWit. You can discuss and argue about how this happened, whether it was fair, whether it was thanks to misinformation and all of those things, but eventually this is what happened. The community decided to keep the small blocks, go with SegWit, and not increase the block size. Big blockers were very disappointed. Many of them actually migrated to BSV and BCH, so Bitcoin Cash and Bitcoin Satoshi Vision were the ones that actually most of the big blockers migrated to, because they were kind of aligning with their vision. And just to finish this paragraph, whenever a real use case does take off, it only leads to fee spikes and congestion, which eventually drives people away. This is why BTC has no utility, he claims. I disagree. I disagree with that, because the fee spikes, we saw this on Ethereum, and I did have a very quick look at this article. I didn't want to read too much before I start my commentary, because I really wanted everything to be fresh and I wanted to be surprised. But later on, he will be talking about proof of stake, and Ethereum is proof of stake now. And Ethereum has been having a higher fees than Bitcoin for about 3 or 4 years now. I mean, lately, this year, Ethereum fees dropped finally with the latest upgrade that they did. We did have about 3 or 4 years of Ethereum having gastronomically high fees to the point that I was not using anything on the Ethereum blockchain. I was choosing different blockchains. I minted only a few NFTs on Ethereum. I didn't want to use many of the DeFi services on Ethereum because of the fees, because I'm not happy to pay $30–40 per transaction, per a DeFi transaction on Ethereum, when I can do it on Binance Smart Chain for about $1, or Tron, or other blockchains, Solana. Anyways, so Bitcoin had a problem with high fees for about a year. Not even a full year. It was about 6 months that we really had crazy high fees on Bitcoin, and we dealt with it, and we found a solution. Ethereum went on for 3 years at least with super high fees. So anyways, let's continue. Number 2, no long-term security without utility. He claims Bitcoin's security model is currently in a bootstrapping phase where the security budget is supported by high inflation. However, we are now approaching the next phase, where fees are supposed to take over from inflation due to the halvening mechanism. Okay, that's true. Bitcoin was originally designed to be a high-volume payment network where a large number of transactions, each paying a small fee, would be able to pay for the security of the network based on this utility or service. However, because Bitcoin fundamentally changed its roadmap, goals, and vision by refusing to increase the block size limit as was originally planned. Now, you don't need to make that sentence any more complex than it is. It was originally planned, but the plan was changed and Satoshi himself changed it. Satoshi himself imposed the 1 megabyte limit to prevent spammers. So there are now only 2 ways in which Bitcoin can remain secure while keeping the same inflation schedule. Both are exceedingly unrealistic, he claims. Bitcoin has to double in value every 4 years for the next century, or sustain extremely high fees just to maintain the current level of security. This is true. Such growth is impossible since it would exceed the current global GDP in 31 years based on the current price. This is true as well. So I'm not sure whether it needs to double in value for the next century. It is true that it needs to double in value right now because it needs to maintain profitability for the miners, and the miners are not yet at the point where they can make enough profit purely from fees. And he adds, this price doubling would have to continue for another 80 years after that, until the security budget runs out completely. If you understand exponentials and economics, you should know that this is entirely impossible. Now, it's true that Bitcoin miners are not making that much profit from fees alone, but it's not a small profit, to be honest. Monthly transaction fees right now on the Bitcoin network amount to around $700 to $800 million. That's per month. So it's not true that the fees being so small are not making any profit for miners. It is true that fees alone right now are not enough to make a profit for miners, but we are talking about a future. We're not talking about right now. Bitcoin will continue to be mined over the next 10 years. So what I want to add here is that in 10-20 years time, when the block reward is diminished so much that you have to actually make money purely from the fees, hopefully in 10-20 years time, Bitcoin will be much widely used. So we're talking about far more transactions happening, and then of course miners making more money from the fees alone. So this is how I see it. Let's just complete this point here. This all means that Bitcoin's long-term security is unsustainable. Without extremely high transaction fees, the security of Bitcoin will inevitably continue to decrease until it drops so low that the network becomes profitable to attack, rendering Bitcoin insecure. I predict this will happen anywhere between 5 to 9 years from now. 2 to 3 halvenings. So this was in 2023. He's predicting that between 2027 and 2032, this will be happening. It's actually not that far away from now, so I'm curious to see if he would have any merit in that statement. Okay, number 3. No predictable supply without security. There is a third, more realistic option to avoid this catastrophe in the absence of increasing the block size limit before it is too late. Increasing the Bitcoin's inflation rate beyond the 21 million limit will be the only option left. But okay, so he painted here a scenario that is hypothetical, and now he's making a whole new point based on that hypothetical scenario. This is not actually happening. This is not a reality. This is a possibility, and I would argue it's not the most likely scenario anyway. So, option 1 is allowing censorship and double spending to occur as the network gets 51% attacked. Option 2 is to increase Bitcoin's supply inflation beyond the 21 million limit. I suspect once this happens, in around a decade from now, both will occur simultaneously, splitting the network again and causing even more chaos, all as a consequence of rejecting utility and the original vision of Bitcoin during the block size debates. Okay, I understand the point here. I don't agree with it. I personally feel that yes, we could have another big debate about increasing the block size. I don't really think that with today's advancement in technology and everything, we are going to be so opposed to increasing the block size, because even with SegWit, we could still increase the block size a little bit further. The main reasoning to keep the block size small was that, small miners that are not big farms and stuff, people at home, cannot mine Bitcoin if the block size is increased too much, because if you are running a node, you need to have the whole database downloaded. And as if right now a block is a couple of megabytes, and this is every 10 minutes, imagine if a block is 6 megabytes and this is every 10 minutes. We're talking about a much bigger database that you will have to be downloading, and many people are just did not have that capacity back in the day to sustain this. But as everything moves into bigger size and everything and faster speeds, it is not that difficult to imagine that people will agree to an increasing block size. And this I don't really see here as a suggested solution, and I feel that this will be the solution. Nobody is going to agree to increasing the total limit of 21 million coins. Nobody is going to agree to that. Hold on, I need to stop my kitten from ruining something. Okay, I think I'll have to be with her in my hands because otherwise it's not working. Right, let's jump to the next point, because I don't really think that this hypothetical point was a strong one. All right, number 4, no value proposition without security, utility, and a predictable supply. Again, another point that is derived from a hypothetical that is not happening. An insecure and purely speculative asset cannot serve as a good store of value or even a good form of money at all. The best store of value is one with a foundation in utility, as that creates a far more stable foundation for speculation. Furthermore, the impending failure of its long-term security model completely destroys all narratives used to justify Bitcoin as an investment in the absence of utility. The reality is that Bitcoin is unable to provide any value whatsoever beyond mere speculation. So far, I'm not hearing anything about censorship resistance. And censorship resistance is the biggest value proposition of Bitcoin, because it is the first and only form of money that we've ever seen in the history of humankind where we actually have a censorship resistance. You can make a transaction in Bitcoin and it will be approved, even if you are a fugitive, even if you are persecuted by your government and all of those other things that in the past, no other form of money was able to do that. So censorship resistance, this is the real utility that he never mentioned. So I have a big problem with that. Let's continue. Making an investment in 3rd and 4th generation blockchains is far more attractive, not only from a utilitarian perspective, but also from a store of value perspective, as this all translates into a blockchain that is far more secure and scarce. Automatically, the fact that there is a 3rd and 4th generation blockchains does not make them more secure or more scarce. I don't know what he's talking about. Exactly the features at which Bitcoin was supposed to excel at. Well, Bitcoin is excelling at security and scarcity. It is. So I don't see a problem here. For me, this is a point that is not being well presented. The times have changed and the technology has evolved to a point where Bitcoin's token economics now look incredibly weak compared to the competition. I would argue there is no such thing. There is no competition that is stronger than Bitcoin. You could argue that Ethereum, with its usability and especially DeFi functionality and all of that, and programmability and everything, is more advanced. In a way, advanced does not mean more secure or better. Yes, it can do things that Bitcoin cannot do. Bitcoin doesn't need to do these things though. Nobody needs Bitcoin to be able to do smart contracts. And in fact, Bitcoin can do that now with Taproot. Which brings me to his next point, no Turing completeness, programmability, he says. Programmability has proven itself to be a critical feature for any new blockchain. It has enabled a wide range of now proven new use cases. Yes, this is true. And proven new use cases does not need to apply to Bitcoin. This is why this is the beauty of the free market. You have all of this competition, you have all of these other projects that can actually bring that usability if you need it, if you really need it. Because I could argue that 99% of all the blockchains are not needed. We don't really need 5 different types of Ethereum. We don't need, and it is proven already. You have Ethereum, you have Solana, you have Matic, Polygon, you have Binance Smart Chain, you have Tron, you have Optimism, you have many blockchains that are having programmability. Are we using all of them? Do we need all of them? Not really. As you can see, Avalanche and Polygon, what's happening this year? Nothing. Nobody is really bothered about these two. Binance Smart Chain, yes, still going strong. Solana, yes, definitely going strong, but at the expense of the other competition. The other blockchains that were supposed to be competing, they're lagging behind because people don't really need 5 or 6 or 60 different blockchains doing the same thing. It also makes sense that the best decentralized money needs decentralized finance to support it. I'm saying it again. We already had an upgrade that allows Bitcoin to support programmability, NFTs, DeFi, you name it, we have it. We can have it. We don't really need it on Bitcoin because Bitcoin is great at doing one thing and one thing only, and that is just to be secure. That's all. I consider, he continues, programmability to be a necessity for long-term competitiveness as it provides a far more compelling stepping stone to attracting new users compared to the purely speculative SOV narrative and money narrative. SOV is store of value, which requires some degree of ideological motivation, at least in the developed world. Number 6, no DeFi without programmability. Isn't that what we were just talking about? Why are you making a whole extra point out of the same argument? The lack of programmability explains why Bitcoin cannot support DeFi. And as I said, this was written in 2023, but in 2023 we already had Taproot, so I wonder why did he completely ignore the fact that the Taproot upgrade allowed programmability on Bitcoin? I'm a little confused about that. Consequently, countless Bitcoiners keep losing money on centralized exchanges and fraudulent centralized lending platforms. This will continue indefinitely as Bitcoin is incapable of developing its own DeFi, requiring trust in centralization institutions from its users instead, which is all very much contrary to Bitcoin's original thesis. It's actually supporting DeFi now. There is a decentralized exchange that is launching as we speak, Satoshi Dex. I actually talked about this when it was in pre-launch and everything. I invested in pre-sale. So there is, it's all coming. It's all coming. And these are things that somehow he did not account for. He decided that's it. There is no DeFi. There is no programmability on Bitcoin. There will never be. Therefore, I'm out. All right. Let's see the next point. No privacy without capacity and programmability. Actually, with Taproot, there's even privacy that can be added. But let's not forget, privacy, if we want Bitcoin to be used as money, we cannot have complete privacy. No country, no government will allow Bitcoin to become its national currency, its state-acknowledged currency, if there is that kind of level of privacy. So if you really want Bitcoin to succeed, Stop talking about the privacy, because mainstream cannot happen with privacy at the same time. You have to compromise on something, and the compromise will be on privacy. I think as it is right now, pseudonymous, semi anonymous is as good as it gets. We cannot have anything more private if we want to go mainstream. Don't forget that. So let's just see his point though. The block size limit also massively reduces the anonymity set. So in that regard, I don't really need to go through all of these arguments here in this point. For me, this point is a no point. Let's go to number 8. Proof of work is inefficient and wasteful compared to proof of stake. Proof of work carries with it a massive cost in arbitrary computation, almost completely absent when compared to proof of stake. That is true. This cost has to be reflected in either fees or inflation to pay for its long-term security. Proof of work externalizes the cost of validation by requiring a massive amount of hardware and electricity to secure the network, all to solve arbitrary mathematical equations that do not directly benefit the network itself. Proof of stake, on the other hand, leverages the value of the token itself to secure the network, resulting in a far more efficient means to gain high blockchain security. Really? Proof of stake is economically superior since, without this massive arbitrary computation cost, its token economics can have far lower fees and/or inflation in all variations of the design due to this increase in efficiency. In terms of the cost to attack, comparing proof of stake to proof of work, assuming similar attributes besides the consensus algorithm, proof of stake is 20 to 50 times more expensive to attack compared to proof of work. Now, I don't really have enough data at hand right now, or know on top of my head to be able to rebut this point. But proof of work so far is the most secure. This has been proven. Nobody is talking about proof of stake being more secure than proof of work. The only reason why people consider proof of stake is that it is less energy wasteful. And this is a big deal. So far, we have not found a more secure way to mine, to back the network, to actually make it any less energy wasteful and at the same time stronger and more secure. I don't agree that proof of stake is more secure, because proof of stake, at the end of the day, and there are different versions of proof of stake, but in its purity, proof of stake gives far more significance to those with bigger stakes. It is really, very much 50-50, but so far proof of work, at least in terms of security, is having the advantage. I mean, it is really, so far, proof of work is more secure than proof of stake. So I rebuttal this point. Proof of work is less decentralized compared to proof of stake. I'm not even going to read this. This is utter nonsense. Majority of proof of stake is done in a way that if you have a bigger stake, you actually have priority, let's say. So this is a problem, and this is why many people are talking about centralization issues with Ethereum and with many other blockchains that are using proof of stake. We don't really see that with proof of work. Yes, it is true that it's become expensive and that we are getting these big mining farms these days, so it's no longer as decentralized as it was when it started. But it is still not impossible for small miners to be doing this at home, especially if you live in an area where the electricity is not that high. And this is still happening. We're still having a lot of miners on Bitcoin network that are independent, that are all over the world. And you can do it yourself even. So I'm not really sure that this point holds. Number 10, dysfunctional governance. My original 2013 thesis for investing in Bitcoin was destroyed by the very people we trusted to maintain it. I believed in the end that what we witnessed was a failure of governance. Bitcoin's history of power struggles and civil wars is a symptom of this failure. The truth is that the dominant client implementation, Bitcoin Core, has effectively achieved centralized control over Bitcoin development. He's got a good point here. Turning Bitcoin into a one-party system, with Core as an effective gatekeeper of all change. Yes, this is true. This was the biggest argument back in 2017 when the big blockers were complaining that Bitcoin Core, which is the team that is developing Bitcoin for the last decade, they're basically driving all the innovation, they're driving all the changes or the updates, everything is voted for, everything is really put to the public vote, and it is the community that ultimately decides. But it's true that Bitcoin Core, the development team, are the ones pulling the strings, in the sense that they make the decisions, they get the proposals, and then they influence people's opinion and people's attitude towards these proposals so that they can get them approved. That is happening. This is a point. This is one of the good points here in this article. Currently, he says, more than 98% of the full nodes are using Bitcoin Core, which is an extreme degree of centralization. There is literally only one lead maintainer who has the final say over all the decisions in Core, making it a dictatorship. Like all dictatorships, there are limits to what they can get away with. However, this is still a total perversion of the very idea of decentralization that Bitcoin was supposed to represent. This is true. This is all another cultural consequence of the block size debates, explaining why truly competing clients are today seen as enemies of Bitcoin. The myth of Bitcoin is that it is a decentralized meritocracy. This could not be further from the truth. Bitcoin Core has disproportionate power to make any changes to the protocol. And yes, I agree with that. This is true. This is what I just said. So yes, I don't need to read the whole of this point. I agree. All right, moving on to the next one. Toxic culture. From Bitcoin maximalists to laser eyes, BTC is notorious for its toxic and close-minded culture. This is important to understand in light of the lack of any formalized governance, which leaves Core as a de facto dictator of the protocol. That all means that only hope for reform lies in the culture, or in other words, the social layer. Unfortunately, this social layer is highly dysfunctional today. Again, this is partially a consequence of the previous points, as these flows cause a deep, unconscious feeling of insecurity. Basically, he's referring here to the fact that whenever there were discussions and there were disagreements on what direction Bitcoin should take, Bitcoin Core was very aggressive in pursuing their side of the story, and that is what he is referring here to as toxic culture. I agree with that. I don't necessarily think that this is why you should not be investing in Bitcoin. I don't see this as a strong point against investing in Bitcoin, but it is a point of sorts. Okay. Number 12, conflicts of interest. Okay, so here these 3 points, 10, 11, and 12, are basically all one point just broken into 3 parts. So conflicts of interest. The majority of prominent Bitcoin developers are financially supported by for-profit companies whose aim is to develop layer 2 solutions for Bitcoin. This creates a clear conflict of interest against scaling Bitcoin's layer 1. Prominent members of Bitcoin Core received a lot of money and equity from companies building layer 2 solutions such as the Lightning Network and Liquid. Companies such as Blockstream and Chain Code Labs have been funding core developers for many years now. The conflict arises from the fact that these companies benefit from not scaling Bitcoin's layer 1 but building layer 2s. Fair point. It is a fair point where it's claiming that Bitcoin Core are basically paid, and whenever someone is paying, they can actually further their personal agenda rather than having, a completely decentralized network. And we're getting to number 13 now, entrenched and complicit leadership. Power, on average, always corrupts, and we should not expect those in power to go against their own interests and surrender their position, as this only occurs in the rarest of cases throughout history. Good point. The leadership responsible for these failures and departures from the original goals is effectively still in power today. From this perspective, Bitcoin remains effectively captured by parties with direct conflict of interest. The need to overthrow the current Bitcoin's leadership represents a massive barrier to positive change, one that is unlikely to be overcome anytime soon, especially considering the lack of any formalized governance and cult-like following of the incumbents. Good point, I'll give you that one. It's not a point why not to invest in Bitcoin, but it is a point that emphasizes the problems of Bitcoin. It's not without problems, guys. It's true, it's not without problems. Is that enough though to put me away from investing in Bitcoin? Absolutely not. Let's see if number 14 will change my mind. Inability to solve all of these problems is number 14. So basically, we have 13 points, And now let's summarize, let's combine all of these 13 points and bring forth a 14th point, which is just the same from what we already discussed. Bitcoin is unable to change in order to solve all of these problems, in large part due to its dysfunctional governance, which was a point we already made, and toxic culture, which we already made. So far, this is not a new point. Bitcoin's governance has been ruined by the denial of its existence. The greatest trick the devil ever played was convincing the world that he did not exist. I like this. This is a very strong quote here that comes in a very good moment for a very good point, if it wasn't for the fact that we are summarizing here 13 points into a new 14th point. Supporting Bitcoin based on the potential for change cannot be divorced from politics. Any sufficiently deep investigation will expose its flaws and highlight its inability to change. Even when confronted with the type of major existential threats to its existence, Bitcoin is on a train heading directly into the brick wall of its own technical limitations. Bitcoiners' hopes and dreams do not alter that inalienable fact. Conclusion. From a fundamental perspective, Bitcoin is one of the worst cryptocurrency assets on the market today. Are you kidding me? Its only real benefit is its first mover advantage, still putting it at the #1 spot in market capitalization. Dude, it's been 14 years. You're telling me that for 14 years, Bitcoin is at #1 purely because of first mover's advantage. How many years has Ethereum been around for? At least 10 now. So in 10 years, Ethereum, which clearly he thinks is superior, did not manage to surpass Bitcoin, did not manage to push it away from the #1 spot. It's purely first mover's advantage. Really, really. You can project any beliefs you want onto Bitcoin, he continues, but that does not change the technical fact of its inferiority, setting it up for an inevitable downfall. You can speculate on it, you can trade it, you can even set it up a quasi-religious belief system around it. However, the one thing you cannot do is build a coherent, fundamentally based long-term investment case around it, without ignoring the competitive landscape of the wider cryptocurrency market. Okay, well, very good for you. You go with your altcoins as much as you want, dude. But let me just show you how altcoins react in a bear cycle. 99% of the altcoins drop 99% of their value during a bear cycle. And you're talking about superiority. Bitcoin, at worst, does 80% drop in a bear cycle. And at best, it does around 70. So Bitcoin drops by 70%, 77, 80%, and everything else drops by 99%. And you're talking about superiority over Bitcoin of any of these assets. You can talk about technical superiority and use cases and everything. But when it comes to people actually respecting any of those, you can see that easily during any bear cycle. The fact that they lose 99% of their value is because people sell, people exit their positions. People don't want to hold altcoins in a bear cycle. This is why they drop by 99%. And you cannot talk about superiority of an asset over Bitcoin if that asset is being dumped every time there is a bear cycle. And this is every altcoin out there. I rest my case. This is it, guys.